Okay, hi there, guys. G'day, Peter. Hope we are well today. We'll see how many we get on today. I know it's not, it's a bit of a random day, even the Wednesday. Bobby, we've got all the big guns in now at the moment, anyway. Yeah, so sorry about that. I should have really organised this for yesterday, but I thought I'll give you a bit of a heads up, give you a day grace, let everyone know. Lawrence in. How are you, mate? And Farrow. Oh yeah. All right, let's. I'm assuming everyone can hear me loud and clear. We'll get started anyway. So anyone new, let's go through the usual procedure. Thank you very much for joining us too. If you watch this, if you're new to the stream or if you watch it later on, welcome. Just remember in the top left-hand corner, you've got Twitter. So just linking to us on Twitter, we're going to be a bit more active. I'm slowly, bit by bit, putting a few more things up there that may interest you. Definitely interest me. Facebook, the top right. There's no two worries about joining in there to linking in there, but mainly on the bottom right-hand corner. Subscribe to us on YouTube. Now, what I'm going to do, we've got a meetup group, and that'll be going through our YouTube page. So, what I'm going to do, what I'm looking at doing soon, is organising. I want to do like a series of 2 or 3 or 4 live streams, just on trading and structure and price action and just the bits and pieces. Your usual stuff. You probably heard me talk about it a lot, but I want to go into a bit more depth and just do some free streams. So you'll see those. I'll let you know when I've got them organised, but you'll get notified at the very latest. You'll get notified when we actually go live anyway, but I'll let you all know. Also, we're going to try something different today because I was thinking about it recently to change up the tone rather than getting the videos the same sort of process time in, time out, is just changing up the structure a bit. And because I think everyone knows pretty much, I mean, if you're trading a bit, which I know you all are, you know what's going on in the market. So we're sort of recapping stuff that I think most would have an understanding of what's happening, what's driving the markets. It's good just to talk about it. I mean, if you want my opinion, half the time it's not as good as everyone else's anyway, but um, my humble opinion, I'm more than happy to give you, but I think a lot of time we're recapping stuff that's, if you are part of the alert service, you'll get it as an alert in the morning, what's moved markets overnight. I just want to really just quickly touch on if anything significant's changed in the way of levels. And then I just want to have a quick topic, once a week, just have something different. Today, what I want to cover, it perked my interest a bit. I've been looking at candles, and it's mainly, I probably haven't done a lot for a while. It's mainly through the intraday trading that's got me looking at it again. But it's also it's relevant to your daily candles on your share charts and bits and pieces, really to take note of what's happening in the action within the candle, how strong the volume, and all, or just little things like that that can really give you a nice early heads up that action's starting to take place. That someone's starting to step in with a bit more force, whether it's up or down, it doesn't matter. And it's very important if you're sitting on a few gains just to take notice of the price action of individual candles, and you can always break that down on within the charts anyway. If you're a daily candle you're focused on, you can break that down to a half an hour chart. I tend to look at a bit just to see if there's any. Sometimes it's harder to see if you've got lower volume shares you're trading. Obviously, intraday is not going to see too much, but the speed of the candle, um, if it's accelerated up or it's accelerated down, what does that mean? What does that mean to your overall position? Is that good or bad? Should you adjust? Should you take a piece off? All that sort of stuff. I had a really good example on the SPY intraday, which led to a cracking trade, but I didn't quite get onto it. I thought it was a hard luck story you might enjoy. Anyway, we'll get into it now. Let me just minimize that, change the, keep remembering to do that, change the screen, and we're away. So any questions, just shoot them into the chat as we go. But firstly, obviously not much is happening. The overall market still focused on China and the US. Now they might, that I'd love to be sitting on the fly on the wall in that meeting, because what happened, I don't know how you said, Huawei, is it, with the phone company? And the issues that the US are bringing charges up on Huawei. So that's going to be an interesting meeting when China and Trump's gang meet. The pressure's going to be on there. It's going to be a bit more, I think, argy-bargy. So it'll be interesting. I think that's capped the market, definitely capping the market a bit because, you know, if anyone was really getting a bit bullish, I think they're coming to the table, there's going to be something sorted out. That might have thrown a bit of a spatter in the works, whether it's a tactics from the US to apply the pressure a bit. Who knows what's going on, but it is still, I think it's keeping a lot of people out of the market. And it has been for a while, although you're getting commodity, some of the companies are really kicking off. So that's interesting too. What else we got too? So we've got payroll numbers. Payrolls are coming out on Friday, US payrolls. And again, during the shutdown, you got to remember that a lot of the data was either delayed. A lot of the economic data was delayed. So what's been happening the last, 30 days or so that it was shut down? A lot of that data that a lot of people weren't seeing and couldn't really, you know, you're not going to really dive in. Some of the big boys, the funds, are not going to dive into the market based on older data. They want to see up-to-date data, and even it'd be interesting to see how the FOMC minutes go, or the statement more than anything on the economic data. So they're going to have to play catch up on that data. I think payrolls might have been delayed. I'm not sure, but it'd be a big number. So everyone's sort of standing aside. I think they're not putting in risk into the market until, you know, you get a bit more clearance on what's going with China, what's happening with data. Interest rates are expected to be left on hold. And if they come out really strong, they might signal potential interest rate rise down the track earlier than what they think. Just depending on the US economic data, what comes out. And it is leading the market around a bit. What else? I can't think of anything else. So there's a few things that are really keeping the market a bit cool at the moment. You can see that with the Dow. What the Dow was up. Let's just actually get the chart. Have a quick look. Dow was up, and I think the broader S&P and the Nasdaq were both down last night. So this is a daily chart. I mean, anyone could look at that thinking we're overstretched. That's what I'm seeing at the moment anyway. We're a bit overstretched. It doesn't mean you can't keep grinding high. The market can do it time and time again. Every time you think you're hitting a high, especially if you're turning into a bit of a bear. Oh, you got your bear suit on anyway. And you just got to be careful not to prejudge a market and think, you know, it's overstretched, I'll get out. Sometimes it's hard because, I mean, if you've got some positions on and you're going long and they're looking like good setups in the market, you think it's stretched, so you take it off, they could just keep going. You're better off just to let your stops get hit and tighten up potentially on your different exits, especially, and take each individual share as it comes, because I mean, if this market does roll over, just one second. If this market does roll over, sorry, I just had a kid walking in. Yeah, if it is stretched, it's going to roll over. Then okay, you're probably going to get. You could, I mean, depending on what shares you got, you could get chopped out of a few because the markets, you know, everyone's looking at this stage at the moment. Everyone's thinking we're stretched, especially after this massive sell-off. But on the flip side of that, that could be the easy reason. It could have been extended through the Christmas period. So maybe fair value was around 23,300, say a touch below that low. Instead, it really extended that down to about 20, just under 22, 21.7. And it could be easy enough. It could just keep grinding higher. So anyone that's really getting bearish is going to jump in, get squeezed out, jump in, get squeezed out. Anyone that potentially is waiting for a pullback to go long just sees it keep going on without them. They start to chase the market higher. It'd be interesting to see if we do get a bit of a blowout like this and then potentially a retracement. But I mean, it's just one of those things. We just wait and see how it's going. We're not loaded up on now. We've only got one position actually on APT with our alerts, just because, I mean, not because there's some shares that are kicking off, but they haven't really set up for me, and it's hard to sit on the sidelines and watch them go off when you think it's going to go up. They just didn't set up, and there's not a lot that are clear cut. It's more if you happen to nab the bottom, you know, great. But if you didn't, again, great. We could be rolling over. We don't know and the way that just today, the actual ASX was up about 30 or so, and then we ended up only up 7 or so. I'm not sure exactly where it is at the moment. Up 0.4. So nearly break even with yesterday, where we closed yesterday. So that's not the best of signs if you're a bull. It could be a blowout on the ASX. We just have to keep an eye on that and see how it goes. Just take a look at that now. So you can see this is a weekly. So yeah, we've had the market press up. You've got this level just through 5,900s, pull back, a couple of red candles, pop back up. And it's just today we're finding a bit of rejection off that, through 59 there yesterday, finished down. Today it's opened up, traded above and back down again. So if you look at the intraday charts, I mean, look at that. That yesterday opened up, went straight down and went sideways, pushed up on the open today, and then straight back down again. So it's not a really good sign. And if you look at the half an hour chart, maybe we've got a double top. I actually thought here there was a potential for this to hold and roll over from here, but instead we've gone up to retest those highs, and then we fell away from them. So if we can't hold here and we start cracking below, what is it, about somewhere below 58.60 or so, then I'd say this is your third touch triple top or a minor lower high in here, and we start to get some selling pressure come in. But again, there's a lot still that's really keeping the bulls, the bulls at bay and the bears at bay, and with what's going on between the US and China. And we just sort of we're just hovering, banging around sideways. We've been edging up, which is fair enough, but yeah, I'm not willing to put too much risk on the table right up here. I'd rather see a flush lower, flush them out, and then if it starts to hold, then okay, all aboard. And there are a few weekly charts that are starting to look good, but it's just the daily setups that I'm looking at and I'm ironing off that are not looking that, they're not ready. It's basically not ready, and that goes hand in hand, I guess, with the ASX at the moment. So if there's a lot like that, and you've got your professional traders, your bigger funds are not willing to jump in, then where's the ASX going to go? It's probably going to back off from here. So that's probably it. I don't think we really need to go over, Brexit news. Everyone knows what's going on there. They've got the vote to get a deal done, not extend the date for Brexit. I think it's the end of March, start of March. Can never quite remember. So they have to go back now to Brussels in the EU and try to get a deal that they can all agree on, or that Parliament at least can agree on. And if that's the case, then be interesting to see how the UK goes. It might get a bit of a pop. I think the currency might get a bit of a pop on the pound, but yeah, it's still the unknown over there, and that could cause a few problems too if that goes back and forth and nothing gets sorted out. Parliament keeps voting against the deal, and they're going to go back, and it gets closer to the date. It's going to cause a bit of angst, I guess, in markets. But yeah, that's about it. So any questions? I still not really, like I said, focusing just on the ASX, whether or not, if we get through this clear level at, what was it, 58.30? No, what do we got? Low, 58.31. If we get through that, then we know that's a confirmed double top. Then it'd just be interesting to see now what, if I get this up, the action from there is what we'd have to take a note of. No, that's not what I wanted. I want to show you. So from there is what we've got to take note. We've got the market pushed up. All right, so we've got the market stay pressed up. We've got it backed off from the high. We've got it up to here. So what we'd want to see, if that's just a minor double top, and you have to remember it's not really breaking we're on the daily. Yeah, we're on the daily. It hasn't really broken an anchor. So that really the anchor's way down here at, what do we got? Low 57, say 57.50. So it's still, 120 points lower. So the fact that it hasn't broken the anchor still gives us confidence where we're going to watch the price action from here. If we are right and it does pull back and we start getting this type of grind lower, then say the anchor still holds up, that's where you'd want to start to look for your higher low and see if you can work some entries, or if you get some good setups on some stocks to start watching to buy into. And especially if that, if you don't break the anchor and we can just grind lower, that for me is more of, we're preparing, you're just cleaning out a few late buys and preparing to build a new leg higher. And where that takes us, we don't know. I'd like to see a deeper flush just because, that would be nice. But you've got to look at this. You got this high here, the lower high, which is about the same around that 57.50. So we could easily go back down, test 57.50, hold up, wash it out even, and start to lift from there. As long as we sort of close above that zone, that'd be interesting. So if we get this type of price action, yeah. But if we get this type of price action just doing the opposite in reverse, I don't really want to see that to be a bull, because that's different. So that sudden shock down, and this is probably goes into what I want to talk about in just a second. That sudden shock down means you're just lacking that buyers. Buyers are not there. It's a thin market on the buy side. Buyers are not willing to step up. But here, they are stepping up. they're stepping up, pushes down. Okay, they're holding it up a bit. So it's quite a, what you'd say, a thick bid. So there's quite a bit of depth in that, in the buyers. So if the sellers are pushing into it, selling it down, it's taking in a big effort. You know what I mean? Whereas this type of scenario means that the sellers might be stacked up. The same here, potentially, number of sellers, but the buyers are just not stacked up to soak it up. And that's why you get these faster acceleration lower. So it just means that it can give you an idea of what the bias of the overall market is. Does that make sense? So that's what I'm always banging on about, taking note of what's happening. If we do expect a pullback, how's that pullback going to, how's it going to play out? Are we going to get this type of scenario or a bit of a grind lower? A bit of a grind lower means that, okay, there's some buying pressure there. There's still some buyers out there willing to soak up that pressure from the sellers. And then sooner or later, the sellers will cotton on and go, hang on a second, if I'm, it's not really going down. We're giving it a nudge. It hasn't broken any anchor. If I am long and I'm looking to sell into it, or if I'm looking to short it, maybe I'll just get out. I bail, I get out, and I just let it go and see if we can get a better, either a better exit, or you potentially turn around and, if you were short here, you don't really want to, take a hit, so you get out nice and early. But if you are long and you're just selling into the exiting, and then you start to see this price action, you might just hold back a bit and let it play out a bit more. Whereas if you see this price action, that's when you get those, the bottom feeders will start jumping in, trying to pick out a bargain, and then you get that second wave of selling because that has made them scared. That has made them nervous. Just 1 second there, guys. All right, sorry guys, I'm back. Had a little bit of a kid issue. So does that make sense? Does anyone have any questions just on what we're talking about there with pressure of sellers and buyers and trying to just decipher what is happening? And that's what we'd be looking for. I mean, it all depends if we're going to start taking out this little low, this minor low, and then whether we get. I mean, this is exactly what I was just talking about. That original sell-off. Remember we spoke about this, and we got that bit of a grind higher, and we were talking this is going to potentially roll over again. Didn't expect that, but it was just all going in. It was going to plan. You've got the MAs crossing, it's coming back, reversion back to the mean, which is the MAs, and the way it did it too was pretty much like this. And then obviously you got the selling starting to take over when they can see that potentially if you're long somewhere up here, it's not getting back. You'd rather take you've been given a bit of an opportunity to take a smaller loss because your theory is that this thing, if it starts getting going on the downside, then it could really kick on. You're going to take a bigger loss. So you're trying to minimize your losses. So that's what the theory is when you get this little pop and then pop lower after a bit of a grind sideways. All right, any questions there? So I'll get into what I wanted to show you is really flowing on from that. The candles, we've talked about structure quite a bit, price action, and what we're always looking for in when we're trying to incorporate. Get rid of that, and I want to just clear this up. All right, so as you know, we're big on structure and what we're looking for, but I think when you just start, if you can get a grasp on price action and what you're trying to do, what sort of phase of the market you're in, has it broken the anchors, all these sorts of things to try to build up your trade premise or your bias for the market or your bias for the share, whatever it is. We've talked about that quite a bit with structure, but I think what we're going to try to just go over today, and I saw a good example, like I said, on the SPY, and you can see it a lot when the market starts to kick off, candles. What's actually trying to decipher what's happening within that candle. What does that mean when they start to kick on a bit faster, when it accelerates to the highs, things like that? What does it actually mean to your trade? What could it be a bit of a heads up for? Is it heads up a strength or weakness? Is it time to get in or get out, or look for a, maybe an entry that's a bit more aggressive? Things like that. So with price action, once you get, you decipher the price action and you're sort of planning for a trade, it's good to really take notice of what the candles are doing. So with your price structure, things like that, you're not really, look, I'm not too worried about the candles themselves because it can mean chop. They still, you just want that general price action. So if the markets, we're looking for a, and I'll show the example on the SPY, which probably goes into this, is the market's heading higher. So we've got our bias. I think at the SPY at that time, let's just draw it up, it was more something like this. It'd come down, and then you get the market starting to chop around a bit. It's retested those lows, and then we started getting, a move higher. So at this stage, I think I'd had resistance where my resistance zone was right up here. So my premise was, okay, we found a bit of a buy zone here. We found a buy zone. We say bid to offer. Bid to offer means the buy zone to the offer zone, and we're on our way up. That's clear cut on the 30-minute lower time frame. So on the SPY, all I was looking for was really, I'm trying to look for that pullback, continuation of that trend. I'm looking for that continuation trade and for it to kick off. And I'm trying to anticipate that zone there. Now, anyone knows, like, generally I would be looking for something like this type of thing. But intraday, like, it doesn't always play out like that. You can be completely right, and it doesn't always play out like that. So you've really got to take notice of the candles. What are the candles saying to you? Are they saying, that reacting off a low quite strong? So when it comes down, you've got candles, 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 and then all of a sudden you've got this big one that just a bit of a washout, and it finishes back on the high. So it's a pin bar or whatever you want to call it, a rejection bar. And then what's happening from there? Or you've got, in this example, like I show you, you've got this engulfing bar, open lower, and then boom, straight back up. So that you've got to remember when it's all sort of even. The candles are even space, and the volatility within the candles are quite even. And all of a sudden, you've got an expansion in volatility, and that's by a bigger candle, maybe 1 minute, 5 minute, 30-minute, whatever it is. When you've got that expansion in the candles, like we have here, well, let me just change colors so it's a bit clearer. Like here, so you got this down candle. Well, let's just draw that up. Sorry. Red candle. So we had our. Come on, Brady. What's going on here? So we had a candle on the way down, and then the next candle up, it opened a bit lower, and then boom, up we go. So that's an engulfing candle. That to me is saying we've had quite an even run down, like we said here, with the volatility. Everyone was happy. The sellers were happy to keep stepping in. They were stepping in, pushing the market lower, pushing the market lower. The buyers weren't stepping up to the plate, because you might have, say you've got 20, 20, 20 on the bid, 20 on the offer, and behind that you've got another 20 and 20. So it's roughly even, so that the buy, it's just quite clear it's heading down. The buyers, sellers keep stepping down. But then what happens on this candle, it's like all of a sudden they've loaded up maybe 50 on the bid, and all of a sudden the offer 10 behind that and 10 behind that has just really dwindled, meaning that if someone wanted to buy it, to get 20 done, they have to take out 2 levels. And that's why you get this little spurt higher, because it's just really thin. When we say the depth on the offer side is getting thin. Is that making sense, guys? Or am I starting to get a bit sidetracked? And that's really a change in volatility, or a change in mood, or a change in bias of the overall market. And that starts to get your either heads up that, we could be looking for this type of price action, or heads up that we've just found a low, we just put in a low. So a lot of the times you can easily just buy, the break of that next candle. So the third candle, you buy on the break with your stop below, and then just see, and anticipating that you're going to be in that zone, somewhere in that zone on the continuation trade. And then, look for the break of that high. As soon as you get the break of that high, there's extra traders going to be coming supporting your view. You get the break. They would particularly have a stop that's, technically, if you buy on that break of that high and you're looking for that to continue, your stop should be below the high low. The problem I found on the SPY, and what I started to get more into those expansion candles and just trying to analyze the candles a bit better. I've done it in the past, but it's just that the volatility's picked up. So if you wanted to place it, say you were trading like this, your stop could be 12 points, and I'm not willing to risk 12 points. So this is what a lot of time I'm getting caught on the sidelines doing nothing. So if I go back to the SPY and just show you exactly what I'm talking about. So you can see this is a bit like what we had. The markets, we found a big base here, and we've got our major at that stage major resistance zone up at 58.70. I'll drill down. You can see the overall structure. Let me just take that off. Let me just do this. Yeah, let me do this. Take a snapshot so you can see the overall structure. All right. So what we've got is the market's come down, pushed down into the base, and it's come back up. You've got it. This is not really a break of the anchor up this, because this is still the anchor for that level, and it's really come back up. Now, if it's a downtrending market, you really shouldn't get this price action. It should be just from here, probably should maybe a lower high and press through that base. Instead, it's built a higher low, press back up to the anchor, and then basically come falling straight down. You can see straight back down into the support zone, washed it out, and then started to lift from there. So from there, you've just got a series of push higher. This is about once you get through that anchor level or that resistance. I put less emphasis on the anchor once you get this double bottom, especially after this price action. Once you get that retest and it fails for a second time, and then you start holding another higher low, I'm inclined to preempt that break. And that's just the way I'd be trading. And don't forget, we're on a 5-minute chart here, but this is similar price action as what we get everywhere. You get it on your currencies, your indices, you get it on your shares as well. It's just interesting to see what's actually happening and trying to. So we're talking about price action here. We're not talking about the candles at the stage. So of course you can see the market's pressing up, higher highs, higher lows, and up we go. I just got to find out where. So when I was looking at it, was about here. So if you can see, it was here. So I'm at that stage. What I'm looking for is just a continuation. So we've got, that's our trend up. So at this stage here, I didn't know what's happened, but you can see, high, low, high, low, high, low, the trend's up. So what I was really trying to set up for was a pullback, build a high, low, and then go. All right. But at that stage, you can see the market's open, start to get choppy. But just look at this candle. You've got an expansion candle here, which really wasn't deep enough. So I tend to look for price action mixed with, and now what I'm trying to do, especially on intraday, is just drill down on the candles just to get an idea of, to try to refine the entries and try to pinpoint the entries. And I was looking for, at this stage, you can see just in here, I can just draw. Oh, maybe I'll just make a different color. So this was an expansion candle, but it really hadn't done anything at that stage. You can see that it's slightly different. I wouldn't want to get in on that one because it hasn't really had a deep correction, just to wash out a few of these buys. And what you're looking for is to get squeezed out as we get that correction down. I'm generally looking for two moves lower. And you can see that we've got this pop up in the open, this one, and this was part of that second move up. Sorry, the first move up, and then you get that secondary leg lower, just to squeeze out. So what you're trying to do, what the market's trying to do, is just chop people out, put them back on the sidelines, and then go and get them chasing their tail as they chase it back up again, or down, if you can, if you're looking for a short setup. But at this stage, we're looking for the market to come into a continuation zone, somewhere around here. Now, this was for me is a little bit shallow at that stage, so I didn't really take notice of that. Once we got this lower high coming to play, that's going to drag in a few more sellers. It's come down, it's touched on the low. You can see that washed out the low, but then this is the candle that we're interested in. If we can just take that off. This was the candle that really triggered that next momentum and that buying, that acceleration up, especially when you get it followed. It finishes on its high. It's followed by another expansion candle. So by the time you got halfway through that second candle, that was really, it was really a heads up. Okay, we got this right. So you could have easily, if you're looking to buy on that break of the high, it was at 58.25, say, your stop technically was could have been about 6-7 points, which is not too bad on the SPY nowadays. It was really that got me looking back into it a bit more, and I thought, okay, you've got to take more notice of what's happening in conjunction to price action, which we've talked about a lot. We've always talked about price action, what's happening, and that was just from here. We've talked about that a lot. What do we expect if we break through an anchor? What do we expect if we get a double bottom? What do we expect if we get these little washout moves followed by a higher low? We expect to see higher price action because it's just starting to show that buyers are stepping in. So if you put that in conjunction with trying to just drill down on your candles and what's happening on the candles now, a big bullish green candle is great, especially when it's an engulfing candle. And you can see by engulfing, we mean it's taken out the low, it's open, washed out the low of the previous candle, and then turn around and retrace and turn straight back up to take out the high of that previous candle. So that's going to drag in a few buyers. But the difference between this and this was that it's got to do with the price action of the move. Come back to retest. It's a lot closer to that rising support zone, and then up we go. Does that make sense? G'day, Shirley. So yeah, from there you can see that that was sort of the trigger. And I hate to say I missed that. I was exactly what I was waiting for, but like I said, I was waiting for my typical. Let's just see if we can drill it down. I want to see if we can see what. I don't think it played out on a 1 minute chart anyway. Sorry guys, I'm just going to go back to. So this is what it was playing out on a 1 minute. Now that wasn't. I was watching that 1 minute chart. Now as you can see, that's pretty much the expansion candle. It was open, washed out the lows, and took off. So the next couple of minutes were part of that 5 minute candle. So you can see that it didn't really play out like I was expecting with my higher low, like what I'm looking for. Let me show you. So what I would have expected it to drive into support, push up off support. I don't mind if it washes out, but then I want to see a higher low to work from. So ultimately, this is what I'm always looking for, to buy off a higher low. That just didn't play out really. I mean, I wouldn't really put much emphasis on this, push up, pull back, and then go back up. You could have taken your, entry through there, but really what it was is just taking note of that 5 minute candle, that change in the momentum on the 5 minute, that change. It's really showing you that we've rejected the lows, we've washed it out, and that market, there's some buyers that have just turned around and whacked it back up again, giving it a good nudge, pushing the market higher, and with a bit of force. And the actual idea, like we were just discussing before, that sellers are starting to dissipate, and that's taken a bit of selling pressure out of the market. You've got this move down, a pop back up, so it's tried to go again, and then the sellers it's come back up again, made a lower high. Sellers are given another good nudge, but once it gets to here, and it can't get through, and all of a sudden you get this washout and retracement, then your sellers are just going to dissipate, and that means that anyone that's wanting to buy it, if they're chasing the market up, they're going to be hitting a thinner market than it was previously, and that's why you get this expansion higher. Does that make sense? Quickly. So I hope that makes a bit of sense of what I just want to quickly look at is, as an example, and get ready to put in your share codes as well. You want to take a look at. This is, I'll go to my other chart. This is PME, something that I'm on the daily. That's had some cracking setups, and it just goes to show, if we start from left to right, for example, just taking note of what is actually happening. So we've got, actually, I'll make that a bit thicker, yellow, and all right. So what we've got here, you can see the market's pressed up. Then we're backing off from those highs. You're getting lower highs coming down. And this was actually quite close to breaking, but then you can see that what's happened there. If you were looking at this stage, you probably would have expected, okay, if we start to lift, what I'd like to see is that higher low to build and then contraction a bit and then start to accelerate. You get your break on the high. You've got a higher low to work from with your risk, and then just work that trade off there. But instead, what we got was the market kept contracting, and it went lower, took out the low. So it was still in that contracting phase, but the interesting thing was it did touch on that level 3 times, and it's come back down, and it essentially just washed out that low again. And this is where it gets interesting. It has taken off. So this is your first, once we did this rally, we took out that anchor to this contractive phase. And by contractive phase, this is what we're looking at. That's your contraction, that's your expansion. So we're looking to always buy from contraction into expansion. So that's the contractive phase. On the longer term, on your weekly, you could have probably seen this a bit clearer. It might have been maybe 2 legs, or I don't know what you'd break it down to. But either way, we're seeing the dynamics change from bearish to bullish. So that big flush out of that anchor level, you still got the odd bear will start to walk back it again, and they've walked it down, pressed it down. But this is where it gets interesting, and this is where I would be just more focused on the actual candles and what's happening in here, because each previous time, if we can drill down on this corrective phase, you'd be looking at those candles, they're starting to expand on the downside. Then you get this big pop. So maybe there's some buying starting to go in here. Then the volatility, you can see it would get a bit choppy. The volatility in the candle was starting to match off a bit. And then you get that, the last 3 candles just in here, they're fairly narrow, fairly, small candles. And then you get an acceleration to the downside. Okay, you'd have to say that's another lower high. So we're looking for this low. The next thing we're looking for that low to take it out, which it was. Then the same thing, you get that bit of expansion up. You got a nice good green candle here. So the bit of bullish buying there, bullish candle. But then it wasn't contained, so it was still all part of this price action. And here, the same sort of thing. We're looking at the candles, but the trend is down. Nothing's quite broken. But once we get into here, you can start to see there was consolidation through here. It was probably a little bit different. Any sort of selling that come into the market, it started to pop again. Selling coming to the market, it was popping again. You got this big red candle, which might have seen or dragged in a few sellers, dragged in. Yeah. So it's dragging in a few more sellers, but then the next couple of days it was up, and you got this indecisive day, and okay, sellers jump back in again, then that was rejected again. And then you got a couple of good days up. So it's starting to show where if you're looking at that going, well, if this is going to be a high low, what would I want to do? And I would ideally want to buy on a break. So this is where we were looking at it. So if you just take, and I always use these trend lines just to put those in place to see when are we going to start coming out of contraction. And that's when obviously you got this pop up here and you start to get this consolidation. It's because it's coming out of contraction. So what it's starting to do is come on the radar of a lot of traders who have been watching this, who might be watching this and looking for that. Remember, we've had a good uptrend, contraction lower. We had that little spike up, so the buyers are starting to pick up interest again. This is all part of a major, we're going back into contraction here, but it's a major high low we're starting to look at. We're starting to pinpoint a major high low just with our price structure. But if you can start to look at the candles on the upside, they were starting to accelerate on the upside a bit better. And then you got more acceleration on the upside. So once we broke out of here, we've consolidated, we've broken out of this contraction. What we've got to question is, at this stage, what's going to happen? What is happening? Are we just going to go sideways, be range bound? We don't want to buy into a market that can get range bound for too long. And then the longer it goes range bound, if there's still some more selling to do, they'll just come in and start knocking it down again. So what you'd ideally want to do, you want to buy on the rise when you've got your higher low. And all this was doing was building that higher low. So this, don't forget, we've got this zone here was a major high low in comparison to the previous around that 420 mark, probably on the weekly chart. And then we've got an inside high low, which was this little inside high low after we coming out of contraction. So it's the second time we come out of contraction. We're looking for that expansion higher because it's got that confluence of, a longer term high low and a shorter term daily high low. And then if you start to drill down on just those candles, you get a bit of a heads up. You get that expansion higher, kick up to resistance there. It broke resistance, it's come back in. So you really start to look for a trade coming out of that expansion into, out of that contraction into expansion. So I think that's taking note of what's happening on the candles too, in conjunction to what's happening on the price action, is always going to give you a good little heads up. There was probably, If you go further along, you'll see a similar type of thing. You got a similar setup here, and it's just a cracker of a setup. You know, you've got this market, it's contracting down. So that's what we were saying before when, well, the market's contracting, but it's not really, you know, it's heading lower. It's got lower highs, lower lows, but in conjunction to what's actually happened, the market's not falling off a cliff. And then when you get the market pressing down and then you've got a big expansion higher, and then, okay, it grinds its way lower, expansion higher. So these candles here, for me, are just showing a bit more strength in buying. And when it comes off a high, as opposed to the market, say it presses up, and then you start getting a bit of chop like this, that to me, if it's around the highs, is not a good sign. But instead, if you pop up and then you have a good pullback, and then you get this sort of expansion back up potentially, and then, I mean, it could turn into a lower high again, but that's a bit different price action to what we're seeing, something hovering around the highs. That's more of distribution, what you'd say. A good buying leg up, distribution at the highs. No one's really willing for it to go too low because they're not really interested in buying again. Whereas this, to me, is saying that, okay, we're going to go into contraction. That's going to be a good buying opportunity for a fund or whoever, some of the bigger players. And they don't mind when it just picks off a high, comes straight back in. They might sell some off just to trigger that press it down, and then you get this sort of grind lower, and they're accumulating it potentially on these. You've seen these candles. Whoop, if I can just draw that, these candles here, good accumulation day on the way down. Maybe just in here as well. Again, you're getting these acceleration down, but then you're getting it's just matched off with a good little expansion candle higher. This wasn't really an engulfing candle. This one was. You can see it's engulfing the previous candle, which is good. That's not a bad sign. That's an inside trading day. There's all these names and technical jargon for the candles, but it's worth taking note of, especially in conjunction to this type of price action, especially when you get here and it's pretty clear what's happening. It's got a move lower, pop back up, lower high, a grind lower, lower high again, grind lower, takes out the lows. And all of a sudden you get a candle like this, which takes out a previous lower high. Okay, so that's worth noting. And then after that, pretty much the market's come back down, it's consolidating. You can see the volatility after this expansion candle. There's no selling driving it lower again, driving it lower, like here. You got selling, so it's conviction in selling. Instead, it's driven it lower and then it's been held up. It's been held up, a good little green candle. So you can see the volatility in the candles just in this section coming out of the market. So if you're assessing all that trade, you'd be looking at that going, hang a second, what we've got here is potentially a base, potentially a lower bottom. It's being retested, this expansion higher. It's being rejected. It hasn't broken out of the contraction yet. But pretty much once you go sideways from here, you consolidate at that higher level. I'll be looking for pretty much a break of the high, my stop just below the high low. You know by then it's come out of expansion, and sorry, out of contraction, contraction lower into expansion, and away you go. All right. So does that make sense? Just what we're trying to say, just taking note, especially if the market's sort of grinding lower and you're looking for a buy zone or a buy entry, taking note of what's happening on the candles and just looking what's going on here. What's it saying to you? You know, expansion here, especially off this double bottom, whereas previously, you got a bit of a pop up the lows here. It was met with some more selling, drove it low. Then you got another good green candle just after so the market's not really taking out the lows very far. It took out, probably didn't take out the lows just in here with this move down before we got expansion higher. It did here, but really it failed to continue much lower until it chopped around and it's come back down and retested and bang, straight back up again. So those candles are really showing, it's a good little heads up that, okay, there's a bit of buying here, Someone's building a position. Sooner or later, that position is going to tick off or they're going to tick it off. Or someone else is going to take note and there's going to be more, a pickup in volume potentially just in here. Actually, let's just see what happened on the volume. That was here. You can see the volume start to pick up into this acceleration high. That's when it broke out of contraction. A bit more volume coming into play here on that rally, more volume, and then obviously you got this big sell-off. Some volumes come back in here on the pullback here. That's a major corrective pullback. So yeah, I thought we'd just tick over that. Something different. And I think if you're really starting to get into your technicals and what you're looking at, it's just trying to take note of everything. What's happening overall, what's the market saying, and combined with your structure, what's the candle saying? When you get that expansion, okay, it's not worth buying, say on this one, we were just looking at, actually, let's go back to, so if we bought on the break there, you've got to remember that the structure's still down, okay? It doesn't, if we didn't know this was gonna happen, and we were pure and simply looking at, we've got this green candle, and then we bought in here, pull back to that level at 776, say we bought at 70.80 with this little green pop. Who's to say that the market's not gonna, from there, it's just gonna roll, well, it's not gonna roll over and continue lower, you know what I mean? So that's a bit preemptive because with regards to the structure hasn't broken. It's still in a downtrend. Until it breaks up and out of that structure, that contraction, it's still in a downtrend or potentially just going sideways. It wasn't until here, and when it broke up, and that was, I think, a fair trade if you took it on the break of 828 or 830 or so. Okay, so you can see that the two in conjunction, what is happening? You're trying to build that picture, you're trying to build that bias, and you're trying to really refine your entries a bit more just by using the nature of the candles. All right, that's probably enough for me on that. We'll get into the shares now. I hope if you've got any questions and it's too long-winded to put in the chat, feel free to send it to support@tradesetup.com.au. Just go to the website if you can't find it, if you can't remember. It's on the TradeSetup website. All right, last ditch effort in the cold coffee there. All right, let's look at GEM. So actually, I've dropped the ball on this one. I haven't been watching it. So all in all, two different things. The market's down on the weekly, it's up on the daily. You can see the market's trending up on the daily. We don't know where it's going to. It's looking extended. But first, if we just drill back to the weekly, if we can just come back a bit more. Look at, if we take a step back to the monthly even. So this price action is corrective on the monthly. And the good thing is if you got a good expansion higher, corrective phase back to the MAs, it tried to go up, and then failed again, took out the lows, and that was prior to all this kerfuffle at the end of last year. It's already been having, so the end of 2017. So that there is one big corrective phase over the period of a few years, and that you can break that down to 1, 2 legs down. So okay, it's starting to match off on the monthly. It's overextended on the downside at this $2 zone on the monthly. So the next step is to take it down to the weekly. What's happening on the weekly? The anchor is still, it's miles away actually. It's at 460. Yes, that was broken. It was up and then it was back down again. So you got this anchor. That's your monthly anchor, isn't it? Yeah. So you've got a major anchor up here at 460. We've extended down. But the good thing is, you can see, is that we've just so this is one major leg down potentially. That's your second major leg down from your monthly. Okay, no worries, Bobby. You'll take a look at that. The good thing is what we've done is just breaking that anchor. So this is the move down. You break that down to your lower highs, lower lows. Okay, your lower high coming to play here. It's pushed down. I wouldn't necessarily call that too much of a low, which, I mean, you could. Technically, it could be. You've pressed down, you've come back up, you've pressed down, you've taken out the lows, washed out, and you've had this big retracement. I'm more inclined to take that level of 265, 270 as a major anchor, which is just broken. So, that's a good sign. It's popped up. You've had a little pullback, retested the breakout zone, and it's on its way back up again. The problem for me, it's stretched up here. Like a lot of these charts, they're getting a bit stretched on the weekly. So to me, when the market can only get so high, and that's sort of I guess the force from buyers to push it up, they use up a lot of energy to get to that overbought zone, but the price hasn't really kicked up so hard. You've had a couple of good expansion candles, which is a bit different to what we've probably seen in the past, which is nice. We're sitting on top of the MAs. We've done that before. I mean, there's nothing to say this same sort of scenario can't, we pop up, we get up and then boom, straight back down again. We wash, and it just becomes really choppy. And we might get the same price action again, but we'll have to see. If we drill down to the daily, your trade probably would have been in here if you did get long through 290 with your stop just below 270. It's kicking on. At the moment, like I said, it's just getting stretched. So how much more buying's on the sideline to keep pushing that up? Keep pushing that up, keep pushing it up through, or pushing it up through 310. But at the moment, a couple of green candles is not looking too convincing for me, especially after we popped through the high at 307, and we're rejecting that at the moment with 305.06. So if we start closing on our lows today, I'd be just wary of that one and say that was your entry off here. Okay, so if that was your entry, I'd be a bit inclined to just take it easy, tighten up the stop, take some off or whatever, just because I think the daily's running out of steam along with the weekly. We might be due for a bigger correction. Take out this low at 260, have a pullback, and then what you'd be looking for is obviously your weekly. Go back to your weekly. If we retest it well, maybe we fall short, we start to hold 225, 230, 240, we start to hold, build a major higher low. And then that would mean that you've got one leg up, pull back, you're looking for your secondary leg up, which is going to be a lot bigger if it's coming from the weekly charts. All right, so for me, my opinion on that, I'd just be holding on the sidelines if you're not in. If you're in, tighten your stops. That's what I'd be doing anyway. Go to MOY. Now, it's good to see everyone's, it's more the weekly chart that I really like on this one. I mean, it's easy to get caught up in this. It spikes higher. It's done it before. It's getting ahead of itself. You can see the MAs have only just crossed up, and we're probably a few percent away from those MAs. We're starting to get extended from the MAs, from the averages, if you look at it that way. And they've only just crossed up. I don't mind if we're starting to be extended and the MAs are on the rise. And then I'll be looking at first pullback, reversion to the mean, back to the MAs and looking for an entry if you can get that entry when the market's on the rise. But at the moment, it's only just crossed up on the daily. So I think it's come with some good volume, which is nice, but it has done that in the past. Good volume here, good volume here. That's all good. But again, this is sort of that reverse of what we're talking about. Good move down, correct up. We could fall short up here, fall short of those highs at 25, roll over again, take out the lows at 17, and down we go. The good thing for me is the weekly, and this is what I like. I'm happy just to keep an eye on Molly. Is because of that weekly chart, you can see we've pressed up. What we've done is you've come down, and you can see that two legs there. We've come back up, we've come back down. Okay, so that's your lower high still in play. That's still in play at the moment, and we've made our way back up. Fell short. You can call that 25 cent. That's a double top. But what we've come back down, we've reacted. So you've got a double bottom. So at the moment, the market could just chop around on a weekly. So if you're going to buy that, for instance, if you've bought it on the daily, you're probably looking at that 25 zone or a touch lower to take some off, to peel some, partial exit or whatever. If you got it off the lows at around 17.5, 18 or whatever, you'd be looking to peel some off, because at the moment that longer term chart could just be consolidating through, was it 17, 16 up to 25, just range trade, and could be chopping around there. So if you go long up here, you could get easily squeezed back out. And who's to say it doesn't roll over and go straight down through 16, these lows, because you've got two things in play. Nothing's on the weekly chart. It hasn't confirmed an uptrend just yet, and it hasn't confirmed a downtrend, continuation of the downtrend. What it's saying is that you've got this trend up. You've had a lot of people taking profit off the table, taking their gains. Longer term traders have been squeezed out with this move down. You've got a low put in place. Then you've got a higher low. So the market's essentially, well, take that back, squeezing in between 2 points, chopping around. So it's coming to that point of agreement. And if you do that we'll just do it in a different color. Potentially this is what we're looking at. Whether or not we're broken out, you can go here, you don't know what's going to happen just yet. We could be just coming to that point of agreement now. If we break up here, I'll be more convinced if we get to 25, and then we pull back to build a high low, then I'll be convinced that that's on the way up. But I'll be looking for the higher low after weekly, higher than, say, 16, above this support zone, probably above 20 or so, and I think it'll be game on. At the moment, it's all depending on where you're putting your, this line here. If we just take that back, we could be our resistance zone now. Okay, it's broken out of contraction. The bulls are in charge, not the bears. Even if you put it here across those, you're only touching two tops again. And again, you're only touching two tops. So for me, I'm more inclined to be bullish on this, definitely bullish, but I don't know whether we're going to be stuck within this range of 25 to 16. So just chop around there. and we might squeeze a bit more and then go. It's all good if you buy, but I don't really want to be holding longer term if we start to spend a lot of time chopping between that range. Holding onto a trade for too long, I'd rather be into something else, using that money when the market's rallying. All right, and that could easily be contained if the overall market's starting to get a bit heavy as well on the ASX. All right, so it's definitely, I think the longer term is looking really, really good. Hope that makes sense. SFR. Samphire is another one that I like too. You can see this curving base that's on the daily. And Samphire, if we just take one step back, it's clear you've got this, you press up, the market chopped around that zone, $6 to $7 or $9 even, chopped around. Then you got the first sell off, second leg lower, 1, 2, if you can see that. So you got the pressed lower, took out this key sort of a level at 550, popped back up, consolidated those lows. So that's the bears well and truly in control. Then as you get that secondary sell-off, as buyers are starting to give up the ghost here, they just go, okay, I'm giving up. It's not going anywhere. I've tried to buy a couple of times. I've been chopped out, or I'm holding on to something that's not looking too good anymore. MAs are squeezing in. Then you get that secondary sell-off, or people might have just raised their stop here. Any longs, they've seen this original pullback. They've held through this pullback. They're looking for it to get back up so they can get a better exit. Instead, it's holding a lower level. And that's where you get that secondary move lower, that just to wash out a few more traders, put them back on the sidelines. From there, you can see the buyers have got a bit more active. It's got to the oversold, so it's taken a bit of energy from the sellers to press down, pop back up, and then it chopped around between 5 and 7 for the next few years. It really held above that $5 zone, and then even in here, 2017, it's holding a higher low. If we go back to the weekly, that in there is a whole higher low in the longer term time frame. All the while, you've got that resistance zone up around 7. Lo and behold, you could have got a nice inside entry, potentially here is what I'm liking. If you're looking just purely off the weekly chart, that would have been a nice entry, and you can see it's all based off higher levels holding, higher levels holding, higher levels holding, and again you've got these candles that are showing you a bit of a heads up, expansion to the upside. Comes back down, it does retest, but then it starts to pop back up again, grind back up. Any of the selling pressure is starting to get held up above the MAs at this stage. And then all you'd be looking at through there is going, hang a sec, we're holding higher lows. I'm getting bullish on this. I want an entry. This could be a front run of a break of, was it 7? You can front run that, just clean that up. So essentially my entry, I would have liked an entry through there with my risk just below that, because by then you confirm that if you get stopped into the trade on this green candle, you know that it's held up above the MAs. We're starting to get a bit of expansion. I'm front running a potential break of $7, and I'm not taking too much risk to do that. Off some really nice longer term structure, it's holding up. So sooner or later that structure's really putting pressure on the sellers, putting pressure on, and it's dragging in. The longer it starts to hold higher lows and put pressure on the upside, the more people who've got it on their radar are going to start to step into the action and take a nibble. And this was probably different to what, potentially you could have got an entry here. Okay, you turn around, you got stopped out, but it would have been a bit of a heads up with this price action. It's not working out. Good green candle, a couple of red candles expansion. You could have tightened up your stop, not take too much of a hit on that. Okay, it's come back down and it's chopped around and it started to play out again. So maybe your first entry could have been here. It's a bit wider. It was still the same sort of thing. It's holding up above the MAs, but that one didn't play out. We found some selling pressure. But then again, what it's done the second time around, it's held a higher level again. Okay, this level through here at about 550, held a higher zone than this one. So the first time it didn't work out. Okay, second time it's held a higher level, so it's starting to show a bit more conviction in buying. You can see these candles through here are a bit different, a bit less volatile than what we're seeing previously. A bit narrow range, meaning that it's sellers potentially starting to ease out of the market. The selling's done. There's no more selling to come in. And of course, once you got this break and you got the breakthrough 7, okay, you're on a bit of a winner there. And it's really just following it up through your higher lows from there until we got this big caved in. So all in all, I'll just draw that up again. What I'm looking for here, you can see that the market's it's really come down back down to that zone. It's just touched back on this zone. So that the first few things to look at were on the weekly. Just taking it pure and simply from your weekly, this could easily hold those MAs and head south again. So what we're trying to see is this going to be the low at around $5. This test back into this zone, it's going to be, you know, same sort of action as what we've seen. You know, it's testing that rising support zone. It's come straight back down into that zone, you know, along with a bit of a market belting into 2018, into 2018 when the market was getting really weak. The unknown was really pressuring this market down, or pressuring Sandfire down, especially with China and the US argy-bargy. But it is still respecting that longer term weekly trend up. This is a bit of a blowout here. It's come down. It's pretty much, you know, that V shape straight back down again. So what we're looking to analyze this is we're really trying to see if that's the low. If that's the low, we want to see a break of around 750, and we're getting there now. So if we can break up through, you know, pop up through 750 and then edge down, especially get this top of price action, then great. If we can get that, drop down to your daily after a break of that 750, that's potentially, you know, that's your downtrend's broken. We want to go into expansion. It might need a bit more work to do. And that's why I'd rather see a pop up, a pullback over the longer term, put in a few more days, a few more weeks of price action, bring in a few more buys at say 675 or so, and then see if you can get an entry here for an expansion higher and start to attack $10. And I think by then, obviously, we're going to have more news on what's happening with China and the US and trade and the overall market, the global economy, all that sort of stuff. And if that plays out, it's probably going to be in our favor. Does that make sense? Sandfire 695 for entry. Oh, John, I'll go over VOC. So we've got Shirley, the Aussie dollar. That's going to be a bit of a test. Oh, I better get that up. So we'll stick it into a daily. Actually, we'll go to the weekly. So the weekly, you know, they're a bit harder to play for me, currencies. I'm finding them a bit, just a bit tougher. What I don't like is the fact that on the Aussie, you know, you've got this major, if that's the case and that's major support broken, we've gone through, this is your lower high, then for me, it's looking bearish. It could be, you know, a breakdown through here, whoops, heading back down to, you know, you've got support zone, next level's around 60 cents, and then back down to potentially 50 cents, say. So that's on the downside, but that's based off your weekly. So you've really got to start, you're looking at your weekly, we're in a downtrend on the weekly. It's this zone here that could be the line to stand for the buyers, around the 68 to 70. And if we drop it down, we start drilling down to see what price action we get in the lower time frame, because this is the first type of contractive action back up that we saw. So we've seen the market start toppling over here, acceleration to the downside, a bit of chop acceleration to the downside, a lot more choppy price action, and the MAs have crossed back up in the weekly. It has rolled back over again, but we're going to be looking for, I think this is a key zone around 68 to 70. If this can hold up, so go down to our daily. Whoops, I don't know what does that. And I think this candle here, that big washout to the downside, is maybe, and that's flushed, you know, through 68. And that was, when was that? Just in January, just after the new year. So it's a good time to flush it out. It's just taking out some stops. It would have ticked off some stops below that 70 zone. But even on the daily, it still really hasn't, you know, confirmed anything just yet. I think you're going to start getting some key levels coming into play. Let's just take all this out. So you've had this downtrend. I think that what we're seeing, this downtrend's been broken. It's starting to lift. Got a big flush to the downside. It flushed out this lows, like we're saying, but it still hasn't confirmed. I mean, you could easily topple over from here and start taking out that low again at 70. So what you'd prefer to see for me is a bit of a pop-up, and then potentially some more contraction and consolidation at a higher level to see if we can start getting a bit of a retracement, because you're going to have a lot of fuel on the downside. A lot of sellers are starting to build up, start to get them squeezed out in the longer term, and if we can get it off a higher low, that'd be great. So at the moment, I'm sort of even on that way. Aussie gold. All right, so there's your Aussie dollar. So yeah, we'll see if that one, that's the Aussie dollar, see if they can start to lift. I just like this washout. I like this taking out a few levels. We're starting to get a high low building here, but you've really got this break of, what's that, about 72, 72.50. If we can break that and then start holding some higher levels, I think it's worth dropping down to your lower time frames, whether you trade off an hourly, 4 hourly, to start to see if we can get some action. But it's getting, the 4 hourly is getting a bit extended up here, so I think it's still got a bit of contractive work to do anyway. All right, let's Aussie gold. Let's do that one then. It's well and truly. I mean, if that's, I like this action here. A bit of whoops. This zone, you've had the market pressed up. It's taken out for me. Drop it down to the daily. It's taken out that key level up at, what was it, 1840. Gold's on the rise. Aussie dollar is heading south as well, potentially. So if it keeps sort of holding the lows in the dollar and we start contracting the dollar, gold goes up, then you're going to get that Aussie dollar rallying. I like the way it's holding higher levels, holding higher lows. It's just that we're getting a bit stretched up here on the daily, and that's falling short of this previous high around 1880. So what I'd like to see, again, it's just a bit more contraction, but I want to see, I think it could actually hold some higher lows, a bit of heat coming out of the sellers, but the buyers keep the pressure on, higher lows, and start to accelerate back up again. So that's what I'm expecting more, as long as it doesn't break through that support zone at 1783. And again, you'd always want to see, rather than you see a bit of distribution up here or the market chop around, hold the higher level and then start to break down, I'd rather see come down and then start to hold, like this, a bit of accumulation through here, and it starts to accelerate up, a straight pullback, a bit of accumulation there, and then start to building in again and start to really take out those lower highs that come into play. All right, so that's Aussie gold. We'll look at VOC, and VOC, again, it comes down to that weekly. I don't like the daily because it's a bit extended up here, and that's below that 360 mark. So for me, looking at that just off the daily, we could come in a lower high in here, and it all will come down to what happens at around that $3 zone, or whether we can pull back, find a bid or find some buys at around 310 to 320 and start to support it again and start to lift price. I think the weekly, the more the stochastics come off and you come back down to, say, that 50% off overbought, and the better we can hold it, or if we can actually hold a higher level, then the more confident I'd get in it. So you can see the key levels were probably around here, I think it is. And it's really just touched on that key level. But the good thing is, you've gone a few times, those lows are starting to get rejected. So you've got a bit of a zone. It's at this stage, it was heading south quite clearly, heading south. This last lower high, we pressed down, and then we come into the previous low, pretty much washed it out before we started getting a lift. Previously, anytime we got to the low, it went straight through it, carved straight through it, carved straight through it, carved straight through it. So there, the market was really bearish. So what you're seeing is that selling pressure starting to come out of the market. The sellers are starting to stay on the sidelines. The sellers are starting to run out of steam, is what we're saying. Before we get, and this is the first stage, once you get this press through the low, buyers are starting to get active. Again, they come back into that low, they start to get a bit active. It's this stage when we start to take out this previous high. That's sort of a key point for me. So what I'd ideally like to see, I don't mind if market can chop around here, but I want to see, it's probably a bit easier seeing if we can drill down that a bit more. I want to see a higher level hold. I don't really want to see that $3 zone broken. I don't mind if it comes back down and retest, chops around, and then starts to lift, and that may make the daily chart look a bit nicer if we can come back down, retest 3 off a lower high, but then the buyers start supporting 3. We start supporting longer term buyers are supporting a higher level at 3, or it could be higher. Don't really care, but if they can support a higher level, it's a bit more conviction in the buying. Then I think it's just a matter of looking for your entry off a daily, just dropping it down to see if you can get an entry off a daily. At the moment, I'm not looking. I wouldn't buy through the break of the highs on your daily. For me, then you'd stop would have to be it'd have to be based off your weekly chart. If we get a breakthrough here, stop would have to be quite wide, I would say, below that low of 294, because it's all looking okay on the weekly chart. But I don't think we've got any conviction in buying pressure. We've still got potentially sellers running out of steam, but whether or not we're getting that conviction in buying is what we want. We want to see go from contraction to expansion. Then, yeah, that's what we want to see, to jump in and get active. We'll see how that plays out. Anyway, I think we'll finish off. We'll do A2M just to finish off. I've got to do this a long way, actually. A2, I don't mind. You can see that big curving. So what the market's done, this is on the weekly, obviously. Market's pressed off. It consolidated, pressed up. It's consolidated around that $7 to $8 zone. You can see it pressed high and really took off. So that big candle, what we're seeing now is the market's pressed down, but pretty much it's holding structure. It's holding the anchor. And the MAs they haven't crossed yet, and they're starting to expand again. So we're getting the market starting to lift. So ideally, if we can press lower, say 11, build a higher low, especially on the weekly, because at the moment the dailies, it's toppling over a bit. So we don't want to be buying it, just straight buying it on the bid. I would rather buy it on the rise. That's what I'm always looking for. That way you don't get hold at a crappy position for too long, or if you sit on the bid here, there's no reason to say we're completely wrong, and this just is a double top, boom, straight back down again, takes that 8, and away you go. You get stopped out of the way, or if you don't have risk, then you potentially could take a big hit on that. So what I'm really trying to say is if this is it on A2M, if I can draw this freehand, it would be nice. You can see that the market's starting to press, it's starting to curve, and it's starting to curve back up. But we've got our key levels really on the weekly. You'd want to see it sort of break that level there. You can see it is coming out of contraction. This is your first, that press higher probably a few weeks ago was your first heads up. If we can contract back to the MAs and we can get a zone, if we can come back down to somewhere around 1050, 11, and we start to hold up there and go down to your daily to see an entry, this is your weeklies come down. If you can get back to your daily to see buying off a higher low, get an inside level with low risk and start to front run the break of 12, then great. And I would expect your weekly would be something like this. If that's going to play out, your weekly would look like that, but potentially if we can get an entry from a daily, break it down onto your daily to get more entry off a higher low, press down, something like this, ideally, that would be great, a higher low. And that would work well into the weekly chart. Does that make sense there? All right, might have to call it a day there, guys. Any more questions? I hope I've covered everything. Gone a bit over time, but that's okay. As you know, I don't mind talking. Now, if you do have any more questions, or if there's anything I missed or you wanted a bit more clarification, feel free to send us an email. More than happy to get back to you. support@tradesetup.com.au. If you do like what we were chatting about, it'd be great and much appreciated if you can leave a like on the video. And if you're on Twitter, if we start posting things, it'd be great if you can just like that, just to help spread the word a bit. Will help everyone. So the more the merrier, I say. So yeah, thanks very much for joining me, guys. If, like I said, any questions, just let us know. I'll be back in on Monday. And I think I was talking to someone, it might have been John, If we do have a public holiday on a Monday, for example, when the stream's meant to be, I'll try to move that to a Tuesday rather than a Wednesday, just to keep it closer to the start of the week. But if not, we'll definitely have a live stream sometime during the week, but I'll let you know the day in advance anyway. So, all right, guys, thanks very much for joining me. Good luck. See how we go, and we'll see what the rest of the week brings us. See, even like I said, next couple of days will be the China and the US, and then you've got what is it tonight? Is FOMC and payrolls on Friday. So there's quite a bit of information, and quite a bit of stuff to get through by the end of the week. So if it means just putting your feet up until Monday, great. But well, by the time we come in on Monday, we'll have a bit to talk about. All right, guys, thank you. Have a great weekend, and we'll speak to you soon.